Jay, welcome back to the McInnes Marketing Minute. Hello to our fans, welcome back. Yep, you've sat me down at this dinner table with no coffee, no tea, absolutely nothing.
You got a beautiful table here and a beautiful home. You're warm, you're welcome.
Anyway guys, it's now December, which means we're going to talk about the November market update that recently came out. Look back on the month of November and see what's happening. I mean, Jay, were you surprised? There's not really that much change in the trajectory of things.
No, I was not surprised. Kind of as expected, as we've seen the run up that we have. I think we can agree on what's going to happen from here in December. It's going to be pretty traditional.
Yeah. And we've been talking about it a fair bit actually, that regardless of whether the market is quote unquote hot or cold, the market tends to follow the same type of activity, just on different levels. And to Jay's point, what we were expecting was listings and inventory comes down significantly as we start heading into the holiday. Thank you for that descriptive wave.
That's the annual general trend band moving along. Continue.
You were the guy who tried to start Mexican waves at sporting events, right? And it didn't work.
It just got out of control. Because I'm such
you on your own. Yeah, and so that inventory level starts to come down, and we start seeing, of course, sales decrease as people get ready for the holidays. The interesting thing about it is in the grand scheme of things, and we'll pop up a graph for you to have a look at, whether this was east side houses or west side condos, it followed the kind of same trajectory. And although sales overall did decrease, it wasn't to the level that inventory decreased, especially when you're looking at close to Vancouver. Now, a couple of people, we've had a few conversations with people who have said, oh, maybe I'll get a sneaky sale in December because everyone brings their property off the market. There's less competition out there, which maybe a couple happens. But I mean, to our point before, if you're sitting there with days on market, when it's busy, the market has already said that it's not willing to pay over market value. So does that all of a sudden mean people are going to be willing to pay what you're asking? I think that's a far reach.
I think you have to, and again, I think what this week's message is you need to focus on your area and your actual competition. The overall numbers are great, but you still need to hammer down. If you're entering a saturated market and one that's been saturated for a long time now, you need to be sharper than ever, especially coming into this tapering off period, because yes, there's less competition, but there's less eyes on the inventory, less people watching. But if you're entering a hot market, it could be advantageous in the sense that you've still got people watching. You've still got those people that are going to wait and go on next year and hope that things are going to pick up in trajectory, but you've got less inventory. So again, it really has to be nailed down on, if you're entering the market in this time of year, you've got to be very specific and very careful on what the trajectory of your market to date has been, I think.
Yeah, so there is a possibility of a result, but should it be your sole strategy? No. And don't forget, we're always one for trends. As we said, it's coming down. What typically happens in January, the inventory starts coming back, people get out of the holiday season, they start moving on with their lives, and you start seeing a massive rise in inventory, which sales typically lag behind. So you're going to see a bit of a change there, but you'll see a drastic increase in inventory as well. So
again, if you had a saturated market, it toned down and then it resaturates, which I think all markets will have that jump in inventory big time. If you've got people just sitting on the sidelines waiting without urgency, but the market was saturated before, you shouldn't expect a huge takeoff with offers and all that sort of stuff. If you're re-entering a tight market, again, I think there's possibility, but you're going to have more competition for sure.
Yeah, so a few key figures for you. 36.7.
Are you correct?
I'm going to check this.
36.2. Come on.
36.2 versus 22.7.
Yeah.
So 36.2 is the increase in percent of inventory November 2019 versus November 2020.
And is that
Metro Vancouver.
So everything. The blanket, the umbrella.
And 22.7, please fact check me.
That's correct.
22.7 was how much the sales activity increased year over year. So, which is really interesting because a lot of people are talking about, oh, there's not the inventory out there, which is again what we've been hammering down is you need to look at your individual market, because if you take those numbers, then you know there's a significant difference.
It's almost irrelevant.
Yeah, so that's why you need to take into account the specific areas. But ironically, so the sales to active listings ratio was in the mid-20s.
Yep.
Okay, it's not surprising to anyone. I think that it's been at that range for quite a while now, which for those who don't know, above 20% sales to active listings ratio typically puts pressure on prices upwards.
Seller's market.
There we go. Below 12% puts price downwards, and then in between is more of a buoyant market, to use one of your favorite phrases.
Okay.
Yeah. So it's been above 20% for quite a while now, and you know, pricing has steadily increased. So, I mean, on average, detached houses the most, we're going up about 1% a month, which is, you know, a good turnaround. But again, for the amount of, like, for the record numbers that we're seeing in terms of amount of sales, in terms
actual
of
transaction numbers, yeah.
In terms of the sales to active listings ratio, you would expect them to be flying up a lot more, which is why I'm still on the side where this isn't a true reflection of the market. So to put that into perspective, even though we've had all of these record high like transaction numbers that we've been discussing, the average home price index actually decreased 0.1%.
Yep.
0.1%?
Correct.
0.1% versus this time last year. And when you put in that into perspective, housing, it was in detached housing home price index, they actually continue to increase this month.
Yep.
Okay. Townhomes was 0.2% of an increase to the average HPI home price index. So what does that tell you? We've got an increase there, but if the overall home price index is dropping, that tells you that a lot of people are reducing their market value or their listing values or selling for